Hey there traders, welcome back to another episode of the ATFX non-farm payrolls preview. I'm your virtual analyst, and here to give the inside scoop on the upcoming March NFP report. Before we start, make sure you hit the subscribe and notification buttons to stay updated with all the latest trading insights. The March non-farm payrolls will be released on April 5th at 8:30 p.m. GMT 8. Now let's gear up and get ready for this exciting event. In last month's report, non-farm payrolls employment has again exceeded the market forecast with an increase of 275,000, just when the market expected the unemployment rate to remain unchanged. The number rose from 3.7% to 3.9%, ending the previous 3-month streak. On the other hand, the wage growth was slightly below the market estimates, with average hourly earnings up only 0.1% during the month, while rising 4.3% from a year ago. Immediately following the release of the NFP report, the US dollar index plummeted to its lowest level since mid-January, sparking a bullish gold market. On the flip side, the three major US stock indexes faced a decline, while crude oil also experienced a post-NFP drop. For the March NFP, the market expects 205,000 jobs to be created, down sharply from 275,000 last month. The March unemployment rate is predicted to remain steady at 3.9%, and the average hourly wage rate is expected to be 0.3% monthly and 4.1% annually, which sees a slight decrease from the previous month. You should consider the ADP employment change data released the day before as a guide to the financial markets and to reflect what is expected on the non-farm payrolls. The price reaction will be relatively stable if the range between non-farm payrolls and ADP employment change data is close. Still, the changes of unemployment rate and average hourly earnings in the March NFP report are crucial to the upcoming FOMC monetary policy expectations. If the changes are significant, they will directly affect the US dollar against other currencies, as well as the prices of commodities and the three major US stock indexes. The following are the recommendations for the relatively volatile trading products. The dollar index in the daily chart currently trades between 105 and 105.6. If the non-farm payroll report exceeds market expectations, the dollar index could increase and reach between 105.6 and 106. On the other hand, if the data falls significantly short of expectations, the dollar may decrease and fall below the 104 or 103 level. In this daily chart, the British pound dollar is hovering around mid 1.25. If the non-farm payroll data surprises the market positively, the dollar index will likely surge, causing the British pound dollar to fall to 1.24 or 1.23. Conversely, if the data falls below expectations, the British pound dollar may surge to 1.27. It is worth noting that the resistance levels are currently at 1.2707 or 1.2751. You should consider spot gold trading at the $2,200 level. If the non-farm payroll results exceed market expectations, the dollar index may surge, causing the spot gold price to fall below $2,200. On the other hand, if the data falls sharply, spot gold may surge and reach levels of $2,294 or $2,320. US oil futures are currently trading above $81, which can be considered a reliable benchmark at $84. If the non-farm payrolls exceed market expectations, oil demand will be more robust, potentially reaching $86 or $89. Conversely, if the data falls below expectations, the oil price may decrease to $81 or $78. Dow Jones futures are trading between the range of 39,000 and 40,000 level, ahead of the release of the NFP. If the results exceed market expectations, the US 30 is expected to drop to the 39,281 or 39,160 level as the Fed rate cut extends to after June. On the other hand, if the data falls short of expectations, the Dow Jones futures may surge to either 39,979 or 40,092 amid the Fed rate cut hype. The Nasdaq index is currently trading at around 18,000. Which is a vital benchmark ahead of the NFP data release. If the NFP results exceed the market's expectations, the Nasdaq is expected to drop to below 18,000. However, if the data falls below expectations, the Nasdaq may surge to 18,492 or an even higher level as scheduled due to a Fed rate cut. Remember, The above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates.